Have you ever heard of velocity banking or paycheck parking? There's a million acronyms for this, but it's a really actual smart way to pay down a mortgage faster. In a nutshell, I'm going to describe how this works theoretically, practically, and how to implement really quick. All right. Okay. Velocity banking is about putting your money to use when you're not using it. So let's say you've got a checking account, and the checking account is where you receive income, you receive payments. Let's imagine you get paid into your checking account and you bank with, call it TD Bank. So you're getting paid into your TD Bank account, which is earning, I'm going to guess, 0.3% interest, which is basically zero. You might earn $6 for the whole year. And the kicker is you're going to pay interest income on that $6. So you actually earn even less than what you're pulling in. Same time, if you have a property, you better have a mortgage. And that mortgage has interest that they're charging you money on every single day, every single month. Let's say you got a 7% line of credit as your mortgage. Let's use that. You're earning basically zero on your savings, on your checking account. You're paying 7% on your line of credit. Doesn't it make sense to take your paycheck and rather keep it in this useless account, rather to pay down, even if it's temporarily, what you owe? It's like you're creating 7% interest for yourself, tax-free, because you're not paying 7% to your mortgage lender. So that whole premise is how velocity banking, is why it exists. It's just saying, rather than do it this way, I'm going to get paid into my line of credit, which is my mortgage. I'm going to use that to reduce how much interest I owe because I'm borrowing less money per day, really. And at the end of the month, I will have at least come out ahead rather than leaving my money in the account. What happens is it's in the implementation, it's in human error that we screw this up, and we can't be trusted on our own to handle this. One, you need to know it exists, and two, you need to understand that this is so beneficial if you can just be committed to the structure. You can save thousands and thousands of dollars if you just commit to a structure. So to organize everything on your own, it's difficult. I'm not gonna lie. You gotta move a bunch of things around at the bank. You gotta talk to a lot of people. You've gotta have records. You gotta make sure that you are competent and you're structured very diligently. The easy way out of this, the easy solution, honestly, there's an actual banking product that does this in Canada. Now, this type of product is pretty common in the UK, very common in Australia, but it hasn't really picked up momentum here to the tune where it's like the banks are promoting it. Banks don't offer it, so banks don't care to tell you about this. One bank specifically does do this. Bank is Manulife. Okay, so Manulife Bank offers a product called the Manulife One, and it's what I just described. It's rather than have all these separate accounts, it's one account. You get paid into it. It is your mortgage. It's where you pay your bills from. It's hard to see if you're not comfortable with the idea, but understand it would change the way you receive and spend money. If you do it within this framework called the Manulife One, it's a really a set it and forget it kind of solution. If you are interested in learning about Manulife One, qualifying for it, I'm not the guy that's going to tell you, how specifically it works, but I do have friends who are licensed to sell Manulife One and who work for Manulife. So I'm happy to make an introduction if this is something you want to consider. And I absolutely think you should consider this if you were in a position to capitalize on this amazing tool. Now go on, get wealth up.